Welcome to this week's episode of Capital Conversations. Today we have the owner of Credit Fix Solutions, Victoria, joining us. The purpose of this episode is to give you a background on things to be careful of when it comes to your credit file. Thanks, Victoria, for coming. Before we get into it, do you want to introduce yourself, give us a bit of background on what you do and how your business operates?
Sure. I've been doing credit repair now for 12 or 13 years.
Yeah.
I started my own business 9 years ago, Credit Fix Solutions, and we've managed to help thousands of Australians to improve or fix their credit reports so that they can move forward and come back to you and get great finance deals.
That's awesome. Tell us about how it all started.
Oh, that's a story. Went through a divorce, ended up in Housing Commission, was working all hours that got sent for not much money. And so I quit my job one day. I've always been in finance, right?
Okay, yeah.
And then about 3 months into my sabbatical, just me and my son taking him to school, baking bread, the whole thing, I had a phone call. And a friend of mine in Parramatta who's in building, he said, look, can you help my daughter remove a Vodafone default?
Yeah.
I said, look, I don't work there anymore, right?
Yeah.
And he said, I didn't ask you that. I said, can you remove it?
Yeah.
And he wasn't giving up. He was very persistent. And I said, look, I can. At the time I was doing sound engineering, so I was going to move into that field. I said, look, I can. He goes, well, what are you going to charge? Because this other mob want $2,000 up front. I said, no. I said, let me do the work. I said, if I'm successful, because this is 10 years ago now, if I'm successful, $990. And he goes, do you take cash? Sure, cash, I'll take the 10% off, give me $900. All right, done, let's meet for a coffee, get her signed up. Anyway, 3 weeks later, I got that default removed. She got her investment property, whatever she was doing. And the friend of mine, he goes, listen, that's actually a really awesome service. He said, because everybody's charging up front for credit repair, which they were. So I came up with this, no result, no fee business.
And you were the first to do it?
I was the first to do it 10 years ago.
How good is that?
And I just started working with finance brokers. So first of all in Western Sydney, Parramatta, which is where I'm based. I'm a little Westie girl. Can't get out. Once you're in, you stay in. That's it. Done for life. 100%. And then just broadened it out from there. So started going interstate, started working with MFAA, FBAA, the finance associations, getting in front of brokers and just building one-on-one relationships.
That's awesome. Is it just you in the business? Do you have like partners or shareholders?
It's just me, little old me as director, and then I've got a beautiful team of 8 at the moment.
Wow, that's awesome.
Yeah, it's good.
So like mainly brokers?
Mainly brokers.
And do you get anything from FBAA and that? Is that more for recognition or just like...
It's more a marketing tool.
Yeah.
So for my marketing, I don't do any paid advertising. It's all about spending the money on building those relationships.
Education.
And education, showing I can be trusted. The no result, no fee thing is obviously awesome as a broker.
Yeah, definitely.
Because you don't want to refer someone if they're going to get charged up front.
100%.
You don't know what's going to happen.
Yeah,
but 80% from brokers or referral partners, accountants. Some lawyers refer to us as well. Because credit reporting's this little niche. And they don't want to deal with it.
Definitely.
They like the criminal law or family law because that pays the big bucks. But my sort of area doesn't. 20% we get from online or previous clients.
Yeah, wow. That's awesome. Yeah, it's like so important, right? Like how important the credit file is. You were mentioning like the lawyers, they avoid it, but the service that you're providing to these people that, they're in a troubled situation. They might be embarrassed to reach out to somebody. They don't know exactly where to start. But having someone have confidence that they're going to at least give it a serious crack and not charge them is amazing. And like you've built a great business for us. So well done. That's awesome.
Thank you.
So we'll start with the basics. All right. What is your credit score and like what are some things that impact your credit score just for the audience that don't know?
All right, so we all have a credit report. Personal, if you're a business owner, you'll have a company report. A few years ago, we introduced positive credit reporting. Now, all that means in layman's terms is that they started scoring us on the data within our reports. So hence the credit scores. So years ago, we didn't have them, right? In finance, you just had a credit report. If there was something bad, good, didn't matter. We didn't even really look at it when I was in finance.
So wait, when was scores implemented?
I think maybe 5-6 years ago now.
Oh, really?
Might be a bit longer.
Okay.
Yeah. But they didn't exist prior to that. We started following the positive system that America has and the UK.
Like traffic light, sort of like just green.
And that's basically all it is. So you've got your different credit reporting agencies, which I'm sure we're going to talk about. But the scores basically range from 0 to 1,000 or 0 to 1,200, depending on the agency. If you're sitting in red, it's bad. If you're kind of yellow to orange, you're all right. Then green is good to go.
Yeah, that's awesome. Okay, and with your credit score, we see it like obviously as brokers, we're doing credit checks on every single customer that comes through.
Great.
It's just part of our due diligence, right? Like we don't want to provide a quote to a customer not knowing what their situation is, right? So we don't charge the customer, so very similar.
Awesome.
So we get the details off the customer, we run a credit check, which we pay for, which is an Equifax report, what most lenders are looking at when they're completing their assessment. We obviously analyze the credit report and work with that to see which options are going to be best suited for the customer. What we've been seeing a lot of is people inquiring a lot. It might be like a very successful business owner, and that's what we're seeing a lot, like a large transport business, and they're in a massive growing phase and they're constantly inquiring, but they're actually going ahead with those inquiries, and we've been seeing scores drip down. And on the other side of the spectrum, you get like a single living at home with parents that's just constantly applying for credit cards, personal loans, all that sort of stuff. How bad are inquiries when it comes to your credit file, and like the difference between the two? Like you've got that consumer that's inquiring for those personal loans and those credit cards, numerously obviously impacting their score, but you've got someone else that's trying to grow their business, constantly putting inquiries, but they're buying, assets to help grow their business. Like, can you give us a bit of a background on both two?
Yeah.
Sorry.
No, and I'm smiling not because I'm laughing at people, right?
Yeah.
But you probably can hear it in my voice.
Yeah,
I'm kind of laughing a bit. But the irony is, if you are a successful business owner and you have a ton of suppliers or a ton of properties, you're going to have a ton of inquiries, right? As you said.
Yeah.
But you're being punished for that.
Yeah.
I remember this business owner, and he, randomly kind of narcissistically told me that he turns over $20 million a year and blah, 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 and why is my score 400?
Yeah.
And I had a look at his report, and he was so active, and every time he was inquiring, which is happening to all of us, your score gets pulled down a little bit.
Yeah.
Not much. If you're doing a home loan inquiry, your client's going ahead with a refinance, whatever, maybe 20 points drop. But you're talking about business owners that are doing 10 inquiries with suppliers every month.
Yeah.
They will have lower scores naturally.
Yeah.
But like I said to this guy, look, I really don't feel sorry for you because you probably have a personal banker anyway who just gets deals done.
Yeah.
So scoring for them isn't so important. They're cash, asset rich, cashed up, they're good to go.
Yeah.
But for the little singles and the young ones who aren't being educated at school, which frustrates the hell out of me every day of my life, right?
Same here.
They don't know what they're doing. And it's so easy. You see them, teenagers, they got a first job. You can go on your phone, I'll buy a handbag on buy now, pay later.
Yeah.
Next day, you know what? I really want that dress for next week's, cocktail night in the city, whatever they're doing these days. And they don't understand the impact of doing all those inquiries. And we see, I say kids because I'm, feeling old these days, but they're not, the young people, the next generation coming in.
You can't blame them, right? Like
you can't
they're
blame
uneducated.
them. Yeah, and the only thing that you can do, and what we're doing every day of the week, is to educate them and say, hey, listen, you just need to change this behaviour and understand this is what this behaviour is doing to your credit score.
Yeah. It's perfect that like you mentioned something and I just want to touch on it. So the buy now, pay later, that's a big topic, right? Is it a myth? Like say for instance, someone, wants to buy a dress and they, use Afterpay or they use like a Zip Pay or that type of stuff. And then 2 months later, they want to get something else. What happens? Is it an actual inquiry on their credit file?
It is a hard hit on your credit file.
Really? Even Afterpay?
Yeah, not Afterpay.
Not Afterpay.
They're the
just,
only ones we
right.
don't see.
Okay.
But Zip Pay, and then you've got your other, what they call payday lenders.
Yeah, payday lenders,
Wallet Wizard, which is owned by Credit Corp.
Yeah.
So you imagine if you use Wallet Wizard 3 times, you've got Credit Corp on your credit file 3 times.
Yeah.
Credit Corp is a debt collector. So it looks really, really bad and pulls your score down.
Yeah.
Yeah, but it's a real problem and it shouldn't be. I spoke to one of the team at Equifax last year. We were in a roundtable meeting looking at doing some sort of seminar together. And I said to him, why are you punishing people for using buy now, pay later?
Yeah.
I said, that's not fair. I said, this is a global shift in the market.
And like it's everywhere. So like, and there's nothing that tells them, hey, this is going to impact your credit score. So when you see a lot of stuff online, like finance widgets and whatnot, to compare loan options, a lot of them tried their best to advertise no impact on your credit score. It's just to get you preliminary options to make sure you're making the right decision based on your situation and what you're buying. I feel like with those buy now, pay later, if you're going to advertise it everywhere, maybe it would be a good idea just to say, if you're going to keep using this, it's going to show up as inquiries and that might bring your score down. But it's interesting that they don't do that. You know
It's
what I mean?
probably in the small print.
Yeah.
You know, I don't even read small print.
Yeah,
you
yeah.
know, except Apple terms, update my phone.
Yeah, yeah.
Who knows what I've signed? Yeah, maybe they should. Maybe a lot of people still wouldn't read it, I think. Because there's that factor of they want the dress and they want it now.
Yeah, of course.
You know,
Yeah,
that immediate,
emotional,
yeah. And so they might just skim through it still anyway. But the fact that the credit reporting agencies are punishing us for using buy now, pay later facilities, I believe is wrong.
Okay.
So maybe if they can have a shift in behaviour from their end, you know, because a family has, you know, 3 kids, they all need braces at the same time. They go to the dentist is offering, you know, zip pay, for example.
Yeah.
Why would they get a credit card and pay interest?
Yeah, that's fair enough.
It makes sense. It's actually a smart thing to do a facility where it isn't a 30% per annum interest rate.
Yeah.
So I don't believe they should be punished for that. They say they're changing the algorithms, but who knows?
It's a very fair point. Very, very fair point. In those situations when we come across customers that, you know, their credit file's been bashed, they're obviously uneducated, a lot of zip pay, a lot of credit cards, and when we bring it to their, you know, sort of their awareness and, you know, they realize how bad their score is because, you know, we're quoting with lenders at higher rates and they're saying, oh, we saw this rate online, why am I not getting that rate? And, you know, we have to educate them that, look, your credit score is really low because of all these inquiries. And it's sort of like, for them, they get really upset because they weren't educated. They didn't know what they were doing in that moment when they were constantly inquiring. In those situations, if we were to refer them to someone like you, right, and they have all those inquiries, can you give us a breakdown on the process that you take or you and your team take to see if removing those inquiries is even possible, even though they knew that they were making those inquiries to an extent? What is the process to try to get them removed if it is possible? For that particular example.
So every credit report is different because every single one of us have a completely different journey, right?
Yeah.
So we take into consideration the person's story. So it's an initial consultation, completely free, of course. We go through the credit reports with them, usually over the phone. You know, we don't need to meet in person, but over the phone. If we have to spend an hour with them on education, then we will. It's part of the service that I promise to offer, right? So during that consultation, we'll get a feel of, as you do with new clients, you get a feel of that person, you know, where they've been, what's been happening in their life, and then that kind of will tell you why the report is the way it is. And if there are, you know, a ton of inquiries on there, maybe buy now, pay later facilities or, you know, payday lenders, why are they doing that? You know, for what reason? And then educating them into understanding the impact.
So there's no way like you can get it removed.
We can, but it's the education piece first.
Yes,
because that's the most important thing for us.
Because you don't want to do it again.
Exactly. What's the point of fixing that and then they go and do it again next month?
100%.
So education first, and then we have a look at, okay, who are the lenders? Now, some lenders, some of the smaller lenders, payday lenders, I'm not saying they're no good, but sometimes they can't produce the documents we're asking to verify an inquiry, right? So that's how you can remove some inquiries. But if it's 5 Westpacs, or if it's Westpac, ANZ, CBA, Westpac over a month for different car loans, we can't because they have the systems. They're just going to send us all the documents and not remove it.
That's very interesting that you said that because, you know, us as brokers, we come across customers sometimes that have been to numerous brokers and we have a look at their credit file and they've been to Pepper, they've been to Angle, they've been to all these different types of lenders and they haven't gotten approval. And when they come to us, they're like, oh, he's damaged my credit file. You know, it's so important, right, to get it right, especially for brokers, because doing that due diligence up front goes a long way. You can't guarantee someone approval because you're not the decision maker, but seeing like situations where people have been, you know, to multiple lenders and they just really need this asset for their business.
And not even been themselves. They've entrusted their
someone else
authority to a broker who's then gone ding, ding, ding and applied 5 times.
So like, it's very common in the industry. And I think...
Is it really common?
Yeah, it is very common. People don't know who to trust sometimes. So they might go to someone that isn't as experienced necessarily. So they might be a bit excited and just try to go to the lender that best suits them. Or they didn't go through the proper process of doing the due diligence, checking out the credit file, working with the customer to see what sort of documents they can provide. And all those variables combined, actually presenting an option to the customer that they're confident that they're going to get an approval with. You know, sometimes a lot of people take the easy route. And we see that a lot. People come to us and they'll be like, okay, you know, we've been to these people and sometimes we can't help them because of the amount of inquiries. We're like, look, you know, a lot of lenders are just going to say...
The credit report's destroyed.
Yeah, a lot of lenders are just going to say, okay, but they've been to 4 different lenders. What happened in these 4 different lenders?
Because the credit team's going to ask you.
Yeah, 100%. And when they do come back and ask those questions, we know the answers. And sometimes when you tell the lender, okay, look, there's nothing wrong with the customer, right? But for that particular lender, they didn't have the credit score requirement for that thing. But then when you say that to the new lender, they're like, oh, but those lenders weren't comfortable doing it. I don't know if I'm comfortable doing it. Even though if it fits their criteria, by that point, their credit scores dropped by, I don't know how much, but it would have been
200 points,
yeah,
maybe.
There you go. Yeah. So it dropped 200 points. So it sort of eliminated some lending options. So yeah, no, it does happen. And yeah, I think it's extremely important to find someone that's going to, take care and do the necessary due diligence to,
run the report, have a look at the lenders that you've got available before you submit a deal.
No, 100%. And look, there's going to be times where you submit a deal and it gets knocked back. It happens. I'm not going to sit here and say, every deal we submit gets approved. I like to pride ourselves on a high approval rate because we do that due diligence.
What is your success rate? I'll share mine if you share yours.
I would say it's above 95 for an
Very
approval.
Good.
Yeah, because we do a lot of checks and we do.
Well done.
Take the application. We do an individual credit check. A lot of the business that we're doing is commercial. So we'll do a company scored inquiry as well. We'll do a PPSR. We do all those checks and we literally put it all out on in front of us. Lenders, we use technology to get us some preliminary results through our software. But we don't settle for that. We still call the BDMs, make sure it's a deal before we submit it. So we really go through that big process. That's why I can say that 95%, it's above that on every single deal.
That's what people want. Ours is anywhere between 80 to over 90% on every month because we run the reports obviously to check.
Wow.
Last year was our highest. On average, it was something like 87.5% success.
That's amazing.
For the whole year.
Wow. Yeah. I didn't think it would be that high. Look, again, I'm very new to it, but it just seems like such a hard task.
Look, there's a lot of stuff that I don't take on, Louis.
Yeah.
Right? So I've got very strict rules for me and the girls. So it's me, Cookie and Mary doing scenarios.
Yeah.
If you don't think we are not going to get paid for this,
Yeah.
I don't want to see it.
Yeah, that's
I
fair
don't
enough.
want to spend 10 hours on it and 6 weeks on it.
Yeah.
So hence the high success rate.
And I think it's good. You build more credibility that way with your customers. Like sometimes a no up front goes a long way, because you didn't take them on a ride. You didn't overpromise them the world and then, come back to them and say, look, we can't help you.
It's a constructive no.
Yeah.
With some guidance and education on credit reporting. Yeah. And then because, like I said, 80% of our leads are coming from brokers, at least the broker gets an answer within an hour or two, 100%. A yes or a no. So then you can see which lenders.
So you know where you stand, especially as a broker. So then you can just be honest with the customer. Look, there's unfortunately at this given moment, there's nothing that we can do. This is this expensive option. You just need to weigh up how much you need this asset because you are paying at a cost because of your damage.
And it might be only they have to do another 12 months. We'll say to them, look, just speak to Louis about your lender options now. But if you change your behaviour in 12 months' time, credit report and score are going to be a lot better. Yeah. I'm sure Louis can get you a better deal at that point.
Yeah, definitely. We'll touch on some basic stuff, but like a default, right? So let's just say someone has a telco default, $1,000. It was paid a year ago, right? We see this often. We want to help the customer because that's sort of eliminating some mainstream lending options for us. We have some lenders that will still consider it, but we want to see if we can get the best possible deal for the customer. We refer them to someone like you. How likely is, I know it's case by case and you got to look at the whole story and whatnot, but $1,000 paid default, telco default, how would that play out with you guys if a customer came and approached you?
Yeah, I mean, if we feel that we've got a really solid case, we'll take them on.
Yeah.
We send weekly updates out to the broker and to the client. Good news in between if we get it. They'll probably be on a 4 to 6 week journey with us.
Yep.
My admin team will go and get me a case manager at Optus, Telstra, wherever it is.
Yep.
I get all the documents in on the account, and then my main role, because I've just done thousands of them, so I'm really good at it, and I'm the one holding the debt management license as well. I'll go into the written negotiations personally for every single client. So I'm applying that knowledge and that skill set. To every single file.
Okay.
8 or 9 times out of 10, I'll get a yes. At that point, we send the good news to the broker and the client, make sure the report's cleared, get their cleared report, but also making sure they get their other 2 credit reports to us for checking.
What do you mean by that?
Well, you've got Equifax, which is the main credit reporting agency. As you said, you run that straight away. You've also got Elion, which was Dun & Bradstreet. It still is, but just new name. And then Experian, which is another credit reporting agency. And you can have different data across your 3 personal credit reports.
Wow.
not really wow. It's kind of eek.
Yeah, it's a lot. That's what I'm saying. Like, wow.
Wow,
like, there's just so much.
It's like, what?
Yeah. And does it differentiate like telco defaults, financial defaults? So for us as brokers, like we see lenders all the time. They'll say, okay, we'll do a telco default, but financial, we're not touching it, right?
Yeah.
Is it sort of the same sort of thing with you guys in the sense that the financial defaults are a lot harder to remove than versus telco defaults?
No, not at all. I mean, like I said, I think I'm up to about 7,000 or 8,000 written negotiations to date, and it's all to do with applying the legislation that I specialise in to the account. Now, some will take longer than others. I mean, I removed $1 million home loan default for a lady a few years ago.
$1 million?
Yeah.
Wow.
Yeah, it took me 6 months though to work with that particular bank.
Jesus.
So that took a fair while.
Yeah.
But a smaller paid default with a debt collector, for example, often we can wrap those up pretty quick, as long as we've got grounds and some sort of story from the consumer.
Yeah.
But it doesn't matter. Like, I'll take on a Citibank as quick as I'll take on an Optus.
Yeah.
Just depends on the story, what's happened.
It's very interesting. Just for the audience to know, before I met you, Victoria, we were actually referring deals to one of your staff members.
I'm leaving now.
Yeah. Yeah, she was awesome to deal with. And I just wanted to give one case study. We actually had a customer that had a default, and very solid customer, had property in his name, a lot of equity. He was PAYG working for a company, but recently established a business. He had just won a contract. He wanted to buy a car, right? And we're looking at this deal and I'm like, okay, I know which lender, but this default is just stuffing it, right?
What was the default?
It was a $10,000 paid default. I can't exactly remember if it was Telco or it was like a Origin Energy.
That's a big amount, right?
It was a large amount. It was a large amount, but I was like, it's paid. Like, if that just gets removed, I know we can find the solution for this customer. And I was just scratching my head. I'm like, you know what? I'm going to call Mariana, one of your staff members. And what she did was she spoke with the customer and he calls me back up and he's like, mate, that person was amazing to deal with. And I'm like, why? And he's like, oh, she told me what to do. She didn't charge me anything, but she actually told me what to do in order to get it removed. I just called the company and they're getting it removed for me. And I was like, wow, that's amazing. Like, you know, you guys got nothing out of that, but you put the customer's best interest first, which is so important. And we managed to get that customer settled. So,
and that's awesome. And that's, I'm playing the long game.
Yeah.
I'm not out to just cash grab, be in business for a short period, you know, bring the money in. I love what I do. I want to be doing this, you know, until I'm 100. God willing I get there, right? But if you do have that long game focus,
100%,
that's what it's about. We're
if
telling
you put
people
in
how
the
to
customer first, you're going to go a long way.
I always say to the team, we will get business. If you're passionate and you're truthful and you're honest and you're helpful, people come back. I mean, why would we be sitting here otherwise doing a 100%. Podcast?
That's amazing. That's good. And just another thing as well, like back to adverse and like different types of defaults. You mentioned your success rate, right? But different types of adverse, right? I'm just trying to figure out the average turnaround time that you would have to remove like a default, for instance, or inquiries. I know it is case by case and depending on how big the situation is, but if you were to say on average, this is the time it takes to remove a default.
On average, 6 weeks.
6 weeks?
Yeah. We say 4 to 8 weeks because I like to under-promise and over-deliver.
Yeah.
So when in week 3, I can be like, hey, we've got a removal. Oh, my God, you guys are amazing, you know.
That's the best way to approach it. We do this very similar things. Like there's times where we know we're very confident we can probably get it done in a day or 2 days. But I've always said to the customer, this is all from experience. I used to always overpromise. I used to say, I'll get it done today.
When you were first in business?
Yeah, when I was first in business.
We all do.
Just because you wanted to impress the person, right?
Yeah, it's like you meet someone 10 seconds later, you're like, take my card.
Yeah.
You know? Rookie mistake.
Yeah, like we had lenders promising 2-hour turnaround times for approvals and settlements. So like that's why I was saying
and the SLA
like,
is like 5 days.
Yeah. And I was like, all right, we'll smash it out for you. You know, we'll pump it through. I'll get it done for you today. The money will be in the account tomorrow. And what I found was, you know, even if you got it done in 2 days and you promised a date, you just look bad, right?
Yeah.
But if you just don't overpromise and, you know, give that extra couple of days buffer and you get it done in 2 days when you told them 4 days, you look like a superstar. So,
and how are your stress levels?
Yeah, so much better.
Yeah.
So much better. And you know what? The biggest thing was, it was realizing that customers don't care if you're honest. You know, if you just give them
100%.
give them that honesty and say, look, it's going to take 3 to 4 days. And sometimes they might and but just say, look, that's the process. We're going to obviously do our best to get it done sooner. But it's just giving that expectation and not over promising, because obviously it leaves a sour taste in their mouth every single time.
Oh, look, I mean, I've got competitors telling people they get it done in a week.
Yeah.
In 2 weeks. Oh, these guys said they'll do it in 2 weeks. I just need to give them $700 now.
Yeah.
Well, that's fine. It's your choice where you want to go.
Yeah.
But this is how I run my business. I've always run it like this.
Yeah.
And I'm not going to promise you something that potentially I can't deliver.
Yeah. No, 100%. All right. So credit scores, back to credit scores and defaults. So if you were to get a customer, you have a success story where you remove the default for a customer, right? What's the average like improvement in credit score? Like, so we've seen most of the times they're in the red. If they have a default, regardless if it's paid or depending on how much it is, but it's most likely going to be in red. We've seen
300-400.
Yeah, around that 300-400, sometimes
and you
even
need
worse.
them to be like 650 and up, right?
Yeah.
For most majors or
best
interest rates.
Yeah. I'll say that's fair. Like, what would you say, like, usually the jump is, like, on average? I know it is case by case, but, like, if someone was sitting at 200 credit score, they had a default, and you managed to get that approved, does that go back into green on most situations? Or
No, it does. And again, honesty is the best policy.
Yeah.
So if someone's got a default, but they've got 6 missed payments, we know if we remove that default, the score's not going to jump up very much because they've still got negative data. But typical scenario, 1 default, nothing else wrong with the file, you're talking up to 400 points.
Wow.
Jump.
Yeah.
So we've seen people go from 500 to 900. I don't even have a score of 900.
Yeah.
800 or something.
Yeah. No, that's good. That's good to know. And like, we always have customers, Victoria, they come to us and they say, oh, we have this credit score. Like, we'll tell them, oh, look, we've had to explore alternative options because your credit score is a bit low. There's a bit of inquiries there, or you have a default. And they'll be like, no, I did a credit check the other day and my score's 750. And I'll be like, where did you do that credit check? And they'll be like, oh, clear score. And I'll be like, look, no, the lenders don't look at that, unfortunately. We're looking at Equifax. Can you just tell the audience about like the difference in different credit reporting agencies? There's so many, right?
Yeah.
You jump online, there's clear score.
And there's no need for it.
Yeah.
All we need is one credit reporting agency.
Yeah.
It's not going to be a monopoly of an industry.
Yeah.
But it is what it is. They've created a system and then kind of just let it go.
Do you know how they get the data? Like, how they get the data and why the scores are so different? So
a credit reporting agency sits there and lenders are reporting.
Yeah,
and
course,
also the courts are reporting.
Yeah.
So if you have an argument with your supplier, they do a statement of claim, that turns into a default judgment.
Yeah.
The court system is linked to Equifax.
Yeah.
At least Equifax anyway, if not Ilion and Experian.
Yeah.
So all of that data is being recorded. Every time you're doing an application for a client and it goes to that lender, they're going in and they're typing in maybe new information, a new address.
Yeah.
Maybe a client's just got married, they changed their name.
Yeah.
That gets sent to wherever they are reporting. Now, the issue with the system, and it wasn't supposed to be like this, it was supposed to be consistent across the board. It hasn't happened. So, for example, Wallet Wizard, which is owned by Credit Corp, go back to Wallet Wizard.
Yeah.
Sorry, Wallet Wizard, but this is just fact,
Yeah.
not having a go.
Yeah.
They report an open account to Ilion, but they don't report that to Equifax. So you can think your Equifax report is great, score of 800, let's go, get me the car loan, Louis, get it now.
And then the lender goes off Ilion.
Yeah, and the score's 400 because they've got 3 Wallet Wizard accounts on there. So we are seeing inconsistencies. We're also seeing a lot of inconsistencies with the fairness of scoring. I'll give you an example.
Yeah.
One report I saw, the person had missed 2 payments. Nothing else wrong with their file. Low inquiry level, repayments on other accounts on time, age of file was good, that sort of thing. Score was maybe 300-ish. Then another file we got, same week, this person had missed across multiple accounts, multiple repayments. Score was 800-ish.
How does that work?
I don't know.
Yeah.
We're seeing all sorts of really odd inconsistencies across the scoring ranges.
Yeah, that's interesting. So, like, you mentioned how, like, the Equifax and the Ilion scores are all generated. How does ClearScore and all those free credit check people, where do they get their information from? Because it's just so, like, inaccurate in comparison to the sites they should be using. Do you know where they get that information from and how they determine that score?
I think all that's happened is that the credit reporting systems has become monetized. That's my belief. I could be wrong, but I believe that they've tried to monetize all the data that they've got and create these free credit scoring businesses so that they can then sell our data to a bank, to a lender. If you go to a free credit scoring website, I did one myself, within 5 minutes, and it wasn't my proper credit report because it was just data pulled from, I think, Experian. So it wasn't even Equifax or Ilion. And then the next minute I get an email, you've been conditionally approved for a personal loan with Suncorp or whatever. So they've monetized it. That's my belief. And I'm pretty firm in that. Marketing grab. Exactly. I believe I'm right, and I don't think it should be happening. But we see all the ads on TV. People are panicking. You know, get your free credit score. Get your finance approved. You know, so everyone is so focused on score. One of the first pieces we use when we're educating is, listen, stop focusing on your score. Okay, your score is just one element. Your broker needs your report to be good.
No, 100%.
You know, because you could have a score of 800 and a default of $1,000 with whoever.
Yeah, and if you want to go to mainstream lenders, they're going to see that default. So you need to get it rectified regardless of the score. It's about, it's definitely about looking at the whole file and the whole situation to see what's going to be the best solution for them.
And not going for the free credit scoring sites. Go and get your actual credit reports from Equifax, Ilion and Experian.
100%. Now, that's a good point. Things to come in the future, like I would like to get your opinion on this because like obviously we see on the news that ATO debt is soon to be arriving on credit files. Can you give us a bit of background on this? Do you know much about it?
It's already happening. It's already a system that's in place. If you don't have a payment arrangement and you have a debt of over 80,000, I think it is, they can report that on your credit file. If you're not paying it. But as long as you're paying your payment plans, and listen, I've had one, you know, it was a big chunk of money. Put it on a payment plan. There's nothing on my credit file. So only because we had a really good year and then you know what I mean?
COVID. Big sales. Big
100%.
bill.
So it is part of business. It's part of life as a business owner. As long as you stick to your payment arrangement, nothing's going to go on your company file.
I think I've done like 5 videos on this because like we see all the time we have customers that are on an ATO payment plan, but they're not making the payments. And I'm like, look, you're really making it hard for yourself because if you just made the payments, it's okay. We can find the lending option, but they're going to want to see that you're making your payments on time. So interesting you said that. So it's $80,000 outstanding and it would show up on the credit. Does it show up from your experience in personal and company or is it just in the company?
It would be linked to you as a director. So you would probably most likely be defaulted as a director, but the company would definitely be defaulted. You know, you could be a sole trader, so then of course you're going to be defaulted personally. Up until recently, the ATO have just taken legal action. So statement of claim, and then you get a really pretty looking Australian tax office court action on your credit file, which is, we couldn't really remove those. But keeping up to date with your payment plans, most important thing you can do.
Talking to the choir. We're having these conversations every single day. But like, is there anything else that's coming that we should be aware of, or consumers or business owners need to be aware of in terms of our credit files going to be changing? Like, you know, we see all this technology updates and all this sort of stuff. Do you know from anything that they're going to be implementing on credit files that you can share with us? Well,
there's one thing that's just recently come up, which is to do with financial hardship. So if you call your bank, for example, you can't pay your credit card for 3 months, you've just got a new job, you're not going to get paid for 2 months, you just need a quick freeze. That up until now was just not recorded on the credit report. As of June last year, they're now reporting 12 months of financial hardship assistance package information. So you'll have your, so you've got your 24 months repayment history information. Underneath that, if you've made any sort of variance to your contract and your payments, that will be listed underneath for 12 months. So
like, would it just be like a number figure? So
it's a letter. So it's A for applied for hardship, V for varied. And it's stuffed it all up even more. You know? And
like, do you know if that's going to obviously impact their score as well?
It's not supposed to.
So fair enough.
But
lenders will still probably be able to see it.
Well, your credit guys and girls see that, right? It's like, what? I can see you're in a... You didn't tell me. So but at least you can see it too.
No, 100%. Like, because we see like credit files, the worst repayment history, right? So like if they've missed payments, we'll have like the 0, the 1, the 2, the 3, the 4, the 5, and it's in red. Like you can't miss it. And if the lender's doing comprehensive reporting, they're going to see it. So I'm curious to know how they're going to display it. You know what I mean? If they're going to display it in big red on your credit file, it might not impact your score, but if the lenders are going to see it, it's something to definitely take into consideration.
And I feel it's a bit unfair because up until this whole 2-year repayment history information. As long as your customer has 6 months good records, lenders were fine with it.
Yeah.
Now they're asking you questions about stuff that happened 2 years ago.
Yeah, it's hard. It's only going to get harder. I'm so curious to see where it's going to go in the next 5-10 years.
I'll let you know.
Yeah.
I'll keep you posted.
Yeah, no.
Oh, the other thing is the scoring systems have changed.
Okay.
So we now have your comprehensive score, which is what most people see. Or maybe if they get their free report from Equifax, for example, they'll have a score bracket. So, you know, bad, average, good, very good, excellent.
Yeah.
They've brought in a new scoring system at Equifax called the 1.1 or Equifax Apply 1. It's using new technology, AI, it's called Genie, and they're more predictive with our score. What we're seeing now is lenders are checking that 1.1 score, not the comprehensive.
Okay.
Yeah, so it's important. There could be a big difference.
Yeah,
so you could have a good comprehensive score and then a predictive score or, you know, future score, 1.1 score they're calling it, a lot lower.
Yeah, wow. You know how you mentioned lenders are going to be, some lenders will look at that score. How did you know that information? Like, is that something that they share with you, or is that from experience through other brokers? Or
Oh, look, I mean, I've been in the broker world for 20 odd years now. So I go to a lot of their professional development days. We're having conversations with them. Between Cookie, me and Mary, we're seeing, you know, 40, 50 credit reports a day.
Yeah.
So yeah, experience and just getting used to it. You know, the systems.
You seem like you enjoy it.
I do.
Yeah, that's awesome.
Yeah.
Definitely going to refer more clients to you.
Oh, thank you.
Yeah, just want to finish off by the last topic, and we've touched on this briefly, but why don't they teach us these things at school? Like, what's the reason? Like, it just boils my blood. Definitely needs to be some form of education around credit files in school.
And government, if you're listening, bloody do something about it, right? Because it's ridiculous. People are coming to us after they've destroyed their credit reports because of lack of education, and it's stuff we can't fix. It's just, you know, oh, sorry, time heals all wounds. You just got to learn your lesson. Why? Why isn't the government being proactive about this?
Yeah, definitely.
I mean, we're one of the only ones sitting there with a bloody credit reporting essentials guide because I created it at my own cost and I'm sharing it with people.
100%. You know? And like these people, again, they don't know what they're getting themselves into. They're uneducated. And it's not such a hard topic to understand. Like really, like any people in school, if you just have one subject around credit, okay, here are the things to watch out for.
Louis, it's a 4-page explainer pack. The teacher could go through it in an hour.
Yeah, and like it will just save them so much money. It will save them so much time. Applying for loans after the damage has been done is going to cost you thousands more. You know, then they have to engage with someone like you to help them, which is going to cost them money and time. Time is very valuable as well. So definitely think something needs to be done.
You know, and 100%. If the Minister of Education is listening, you know, I'm happy to give you the pack with a multiple choice questionnaire at the end. Make sure the students pass it and off they go, you know. Yeah,
beautiful. Maybe we should go on Channel 9 or something.
SBS.
Yeah, definitely. Now, awesome. Thanks for coming, Victoria.
My
I really
pleasure.
appreciate it. Very important credit files, keeping up to date with it. So to have someone as experienced as you share your insights and, you know, where it's going, how you manage certain clients and certain situations is awesome. So we appreciate it. Thank you
for having me.
Awesome.